Yeah, good morning, everyone. Uh, we saw US market on Friday showing a positive trend, and that is even continuing in futures. Yes, Friday, the US CPI data came, and that came more in line with expectations. The inflation came in at 6.8%, and the expectation was also at 6.8%. And last month it was 6.2%. It seems like now inflation as a percentage is reaching to its peak, considering that lower base is now getting over. Because of lower base, the inflation percentage was looking higher. From here, the inflation lower base will start moderating, and based on that, even the inflation figure may also start showing some sign of decline. Apart from that, taking cue from US market, even the Asian markets are also positive. In fact, some positive commentary from the European nation, from the Chinese annual Central Economic Work Conference, which has happened on Friday, has also given some indication that they will be looking at stabilizing the economy. Of late, we had seen that the Chinese growth was coming down, and now these comments has given some booster to the expectations for the next year. So, and even the expectation is that whatever the stabilization measure will be there, that will be front loaded. So that also had some impact on the metal prices also, and iron ore is up by around 5%. But the other commodities are more of like a flattish or marginally up. Steel is up by 1%, and oil is up by around 1%. Whereas aluminum and copper are stable in today morning trade in China. So overall, directions from the international market seems more of a positive trend. So now I'll request technical team to take up from here.
Sir, I'll take it. I think there is some issue from their audio.
Yeah, yeah, go ahead.
I'll take the derivatives part first. Okay, see on the derivative front, as I've been saying in the last week, Nifty seems to be very positive because the data has really turned positive. Basically, the major impacting data was the VIX. Looking at the 17,500 strike open interest, the call has witnessed huge amount of liquidation in the last 3-4 days, where there were more than 1 crore shares that has come down to 60 lakh shares, and the PCR also has turned near the positive mark, above the one mark, just below the one mark in fact. So that does leave us with a huge gap where Nifty can probably now move very aggressively on the upside toward the 17,800 and 17,950 odd levels, because there is not much call built up around those areas. So the next real important resistance is now around the 18,000 level. So Nifty can probably reach there very quickly. So one can continue to buy and buy on dips as well. 17,500 is an important support area, and that should not be breached. So that should be your stop loss. From the stock specific front, Polycab, Dixon, Ipca Lab, they have witnessed good amount of tractions. In fact, the first two have witnessed good amount of open interest built up, while Ipca seems to have covered shorts. So likely they are going to move up. Also, the theme, that one can see is the pharma stocks as a whole. They have been consolidating from the last 2 or 3 months. Even though the open interest had built up from the last 2-3 months, they haven't really moved up. In fact, most of them have moved downwards. But at this point of time, looking at the overall positions in the stock along with delivery, looks like the pharma sector as a whole is likely to perform going forward. So even though there's not much interest from the retail side or from the FI side, I believe pharma should move up. So the likes of Dr. Reddy, Lupin, Divi's, Sun Pharma. These are the stocks which can actually really move up from here. So look out for the same. Also, one more thing to note is the short covering action in the Bank Nifty stocks. Bank Nifty as a whole had a huge amount of open interest built up on the short side at the start of the expiry, which is starting to cover now. And the highest covering which is likely to come is in ICICI Bank, Axis Bank, and HDFC Bank. So these three banks are likely to become very aggressive on the upside, and one can look out to buy the same. And even SBI from the PSU pack. So that's it from my side. I'd now like to have the technical team to take over, please.
Okay, thank you, Neera. My voice is audible now?
Yeah.
Yes, okay, thank you so much. As of now, looking towards the global market and Asian market, we believe that the Nifty is likely to open with a gap up level at around 17,630 to 640 levels on the higher side. I believe this pullback rally is to be extended towards 17,800. The resistance is provided by its 50 days moving average. From the last three trading session, we are witnessing that the Nifty is well placed above 100 days moving average, and it has taken a very strong support of that level, which comes to at around 17,300. And from that level, we have seen a great bounce back rally. I believe Nifty has a potential to touch the feet of 50 days moving average, which comes to at around 17,800. So this rally is likely to be continued as long as it sustains above the support level of 17,300. For the today intraday purpose, the first resistance is placed at 17,640. Above that level, 17,770 levels can be seen. Whereas on a downside, 17,500 will be the first support. Below that level, 17,420, 400 levels can be seen on the Nifty side. Coming towards the Bank Nifty is just hovering near its 100 DMA. Today it's likely to open above that level, and if the Bank Nifty maintains a positive closing above 37,300 levels, then definitely this pullback rally is likely to be continued towards 38,300 level, the resistance provided by its 50 DMA. So the overall this pullback rally is likely to be continued for the coming trading sessions as such. Looking towards the technical setup, Bank Nifty for the today's intraday purpose, the resistance is placed at 37,400. Above that level, 37,600 levels can be seen. Whereas on downside, 37,000 will be the first immediate support level. Below that level, 36,800 levels can be seen on the Bank Nifty front. Coming towards the Nifty Finance, as of now, we are witnessing a very good bounce back rally on the Nifty Finance as well. This particular indices, I believe, has a potential to reach at least up to on the higher side. Coming towards the Nifty Finance, the first resistance is placed at 18,200. Above that level, 18,300 levels to 340 levels can be seen. Whereas on a downside, 18,000 will act as a first immediate support level. Below that level, 17,920, 900 levels can see. The overall view will remain positive itself, little bit cautious at the higher levels, but yes, we believe that the pullback rally is likely to be continued, and we are getting a sectorial participation from each and every sector, which gives a really a good indication. So I believe those who are looking for a long positions, they can definitely hold on or build up the long positions, but with the strict stop losses. I think that's it from my end. I request fundamental guys to carry forward the call.
Good morning. Minda Industries will be enhancing two-wheeler alloy wheel capacity by 2 million units per annum. And one of its subsidiary also will be expanding the four-wheeler alloy wheel capacity by 30,000 wheels. So alloy wheel is a high margin business, so it should be good for margins and profitability of Minda Industries. Also, company has announced that it is entering a 50-50 joint venture with a German company, Frevo, for manufacturing EV components, and it has planned a capex of almost 400 crores over the next 6 years. So net both the news are positive for Minda Industries. Antony Waste Handling Cell has received a letter of intent for door-to-door collection and transportation of municipal waste from Sardar Paharganj zone of New Delhi Municipal Corporation. So according to this order, this is a 10-year order, total revenue of 10,000 crores. However, the company's share in this will be 15%. So approximately 1500 crores over 10 years, which is 150 odd crores per year of additional revenue, which is a good big jump over the current run rate. So positive for Antony Waste Handling Cell also. Thank you.
Good morning, everyone. Dr. Reddy has received USFDA approval for Novaring. The company is evaluating further steps in relation to this product. As the market opportunity has decreased lately, the company is late in getting the approval. The approximate size for this drug is around 200 to 250 million dollars, and they have already taken the price hit provision in terms of the decreased market share. Probably this is marginal positive still, as there are still not many players in for this drug in the market. Today, MedPlus IPO is also opening up. The company is into pharmacy business. They have their own stores as well as omnipresence in terms of online app and website through which you can order their pharmacy and the drugs and products. The company is mainly focused in the southern region of the India, wherein like in Tamil Nadu, Andhra Pradesh, Telangana, and they also have presence in some places like Maharashtra and West Bengal. They follow the cluster-based model, wherein they select one cluster and go deep in that cluster, and then move on to the next place. They have also established brand value and value proposition to customers, wherein they supply good quality products at reasonable prices. They also are likely to increase their share of private labels where the gross margins are higher. We like this company on the basis that they have a the market size. There's a huge opportunity in terms of market size, and also the company has been growing at around in 10 to 12%. They the margins are also improving as they're establishing their base. The IPO is opening today and would be open till 15 December. The price band is 780 to 796. We are positive on this. However, there is no peer comparison, and on this pricing, we believe that it is on the little higher side. That is why we are recommending subscribing for the long term. Thank you.
Good morning. Tega Industries IPO will be listing today. The issue size is of 619 crores, comprising of a sale. The issue band is at 453 at upper band. The company is a leading manufacturer and distributor of specialized, critical to operate and recurring consumable products for the global mineral beneficiation. The company is well placed across the value chain of mineral processing with wide range of products and solutions. The company operates in oligopolistic market structure with very minimum substitution available. The company has a marquee global customer base with a robust order book position of 316 crores. We believe we are positive on this company with the financials being very positive. The sales and EBITDA grew at a CAGR of 8% and 25% respectively. The company has an attractive ROE of 22% and is available at PE of 22 times FY21. We had recommended subscribe to this issue, and we are likely to see a good listing. Thank you.
Yeah, I think that's all. That's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.